North Carolina's tax codes were originally drawn back in the 30s during the Great Depression. Since that time, they've been amended, modified, deleted to the point where they are filled with exemptions, exceptions, preferences, loopholes, name it what you want to. We've had at least 3 major blue ribbon study commissions over the last 10 to 15 to 20 years. Take a look at the issue of tax reform. Interestingly enough, many of them come back with the very same recommendations. But every time we try to do something so far as tax reform is concerned, it gets bogged down to the point where it is so complicated and there's so many different elements to this machinery that nothing gets done. But there seems to be a great deal of anticipation and hope that 2013 might be the year that we see our tax codes rewritten and reformed in North Carolina. We've got 2 very capable panelists to be with us today. Let me just start off by saying that Representative David Lewis from the legislature from Harnett County was supposed to be here today, but he's gotten tied up in a redistricting lawsuit involving the state, and as a result had to bail out on us at the last moment, and certainly it is very understandable. And in fact, Senator Bob Rucho, who is also with us, is supposed to be in that, but he gave a higher priority to being here with you than he did to being there in this redistricting lawsuit, and for that we are very thankful. Bob Rucho is a dentist from Mecklenburg County, North Carolina. More importantly than that, he is the co-chair of the Senate Finance Committee. He has put forward a very widely discussed tax reform proposal in North Carolina, and you may have heard good things or bad things about it. The one thing I think you have to applaud Bob Rucho for is he came forward with a comprehensive plan. It's the first time we've seen that happen in certainly our memories, those of us that have been dealing with this. Always before, we've gotten little dribs and drabs and partial parts of it. Bob came up with a comprehensive plan, and Senator, for that we are very thankful.
Thanks, Tom.
We also have Becky Gray with us, who is the Vice President for Outreach for the John Locke Foundation. She serves as a frequent panelist on North Carolina's best television talk show, C-SPAN. Becky is well versed in most public policy issues, and the Locke Foundation has in and of itself put together a version of their own tax reform package, and Becky is well versed in this and is able to talk about it. Frankly, I like having 2 people on a panel because we can get some good conversation going back and forth, some interaction going back and forth, and my hope is that that's exactly what we will have for the next 40 minutes. I'm going to do as we have done before and ask each panelist to make a brief presentation, and after that then I will begin some discussion. Senator, I will begin with you.
Thank you. It's very great to be with you. I will say to you, I was supposed to be at that redistricting where all these lawyers are over there telling all kinds of stories, some true, not so true, but I'd rather be with the real people, not with the lawyers, so I sent David Lewis over to be with the lawyers. This issue of tax reform, Tom alluded to, there actually has been 7 groups that have tried since 1951 to change the tax policy of the state of North Carolina. As was alluded to, there are some serious problems when you still base your economy on a 1930s economic model. Like it or not, 2013, North Carolina is a lot different now than it was then. And we need to find a way to make ourselves competitive again, to the point where, agriculture will still be #1, and we want it to be #1 because the Chinese can't steal our products like they do everything else. So we applaud you for that, of course. But we want everyone else to be able to have an opportunity, and what our goal is to have economic growth, prosperity, and jobs. And that's the key to what we're trying to do. 7 other groups have failed because of the fact that it was a matter of leadership, it was a matter of political will, because this is a very complicated and a very personal subject, because everyone feels, I got this special tax preference. You can't take, I want all those special savings, you know, tax cuts, but you can't take my preference away. Well, I think had I had an opportunity, and maybe one time we will find a time to go through a little PowerPoint presentation, but I'll cull it down to some points. I've studied this along with a number of members of the House and the Senate, along with Mike Hanna, who's my finance counsel, both a CPA and a tax attorney. And what we've seen at the end of at least the last 10 years, we've seen a decline of income, whether it's per capita income or net household income, both of which mean the paychecks today from what it was 1990, year 2000, 2013, has been declining. Your paychecks are declining. That means individually it's less, but more importantly, the people that buy your products have less money to spend. Now that's not healthy. The other thing you've seen is an increase in taxes in North Carolina. You not only have a lower income, you're having tax burden that's higher. So guess what that means to disposable income in this state? It's less. Nobody's out there to be able to, one, maybe start new businesses, but definitely not buy your products, whether you're agriculture or dentistry or whatever you may be trying to sell, because that's the full gamut of the economy. But again, income's declining. Poverty's increasing. So what that means, our economic system, which is a very progressive tax system, actually led to greater poverty. Now, why would I want to continue doing that format? Something's fundamentally wrong with it. The other thing you see about the fact is that you're seeing unemployment. We're the 5th highest unemployment state in the country. Now, if our economic system was so great, why are we 5th highest? And it isn't that, because if you look, we've spent $6.7 billion, and that is $6.7 billion on incentives and credits and deductions and everything else. And over a 10-year period of time, we actually netted 61,000 jobs. Now, if anybody wants that deal, you'll let me know, because we got some land to sell you. Here's what I'll tell you. There's a problem out there. The economy is not meeting the needs of what is a new global economy in North Carolina. It's not meeting the needs of jobs for the people of this state. I can show you a chart, and it shows 360,000, a difference of about 360,000 people from the jobs we have to the people that are in the workforce. And that's not healthy. That means we're not doing well. Along with that, we're seeing an erosion of the sales tax base, going back to 1970. Now, actually, the sales tax actually started in 1930 as a temporary tax, and we in North Carolina are pretty notorious about temporary taxes. I think we've redefined the term temporary as far as taxation is concerned, because they never seem to go away. But unfortunately, that temporary tax started then. That was when the person with basically $100 in their pocket would be able to spend money on disposable income, and in essence, 2/3 of everything they spent on was goods, tangible products. And over the years, as we've shifted to from a manufacturing to a service economy, that shift has gone tremendously to it's completely reversed. So what that means is 1/3 of what we buy today is actually tangible products, goods, and 2/3 are services. But yet, our tax system is only taxing goods. It doesn't tax services. And what that means is, that means that government has decided to pick winners and losers, and has decided to say, you're going to have to pay taxes on goods, but not on services. A proposal that we like to bring forward at some point would be to consider, and this is what Tom alluded to, each of the groups that have made recommendations, each of them have failed. And by the way, another reason why they failed is someone decided they wanted to raise $1 billion new so the government would have more money to spend. That's not going to happen in this plan. We're looking at a revenue neutral plan, okay? But a consumption-based tax that actually has a broad appeal, broad range, so that everybody has skin in the game. That means that the person does haircuts or does yards and lawns, the dentist, the physician, the attorney, the accountant, everybody's in the game. No one's given special preference. Once you do that, you have a very, very broad sales tax base. You can depend on that because it's a lot less volatile than income tax. And in exchange for the fact that we go to a broad-based tax, we would look at zeroing out income tax, personal, corporate, franchise tax. Capital gains will also be gone because of that tax. And again, one of our plans is to get rid of the death tax, the estate tax as part of this. That's a new change that occurred with the fiscal cliff bill. And what it meant was prior to that change, the people that died, unfortunately, that had an estate, there would not have been a tax, but after that, there's an additional tax, and what we've decided is that's going to go. And so we believe that that's the right way to go. We can talk about more details. I want to give Becky a chance to present, but there is a better way of having a pro-growth economy based on consumption. Consumption is very important, and what that means is every time, if you happen to have more money in your pocket because of the fact you no longer have to pay income tax, you're not having to pay money to the government, you have more money, you can go out and do two things. You can buy something you need or want, which means that that increases business activity, that increases income, it increases job creation, or you can save it. And if you choose to save it, you invest it, that means there's more money for mortgages, for building homes, and or for lending to businesses, so either startups or expansion of businesses. Consumption-based tax is a very pro-growth tax. But, and I'll tell you today, if we move in that direction, I will never support anything that doesn't allow the personal income tax to be brought down to zero. Okay? That has to be, that's the change, that's the exchange you have to have. Otherwise, you're being double taxed, and that's not what we're all about. We're about having a competitive economy that will create jobs and create prosperity, and that's what North Carolina needs to be returned to. I'll stop there now, Tom.
Thank you, Bob. Becky?
Thank you. First of all, I want to commend Senator Rucho for beginning this discussion on tax reform, not only here today, but in general in the state of North Carolina. He's been really a leader in this, and it's something that we've really needed. And Senator Rucho, I want to thank you for all the hard work that you've done.
I think all of us can say
Absolutely.
we talk a lot about leadership in North Carolina. You're doing it. Thank you.
Thank you, sir.
Yes, and thank you. Tax reform, as Senator Rucho said, is very important. It's been something that's been tried for the last 20 years. The reason why nothing's been done is because it's hard and it's complicated and it's heavy lifting, and there's a lot of people that have an interest in it and a lot of very loud voices of people having push and pull in that debate. And we talk about the tax system that was set up in the 1930s and that it's gotten messy and there's carve-outs and it's complicated, and all of that is true. But if all we were going to do with tax reform was just tidy all of that up and tie it up with a big red ribbon, it's not worth doing. It's not worth the aggravation. As Senator Rucho said, what makes this worth doing is creating a system that will drive the economy, that will grow the economy, that will create jobs, that will get us out of this recession right now, and also pave the way for real economic growth in North Carolina over the next several decades. So unless you can do that, it's just not worth the aggravation to try to get it done. So I totally agree with Senator Rucho on that, and I think we're all trying to get to the same place. Senator Rucho has put some ideas on the table, some good ideas, some good considerations, and there's other ways of looking at it as well. So let me throw out just some other ideas to put out there on the table. He's absolutely right when he talks about we need to go to a consumption tax. And an idea that we've come up with is a consumption tax, but a little bit different way. One of the problems that I have just fundamentally with a sales tax, and whether you apply that to goods, services, whatever, is what that does is the government mandates and puts a burden on businesses to be their tax collector. It's my belief as a fiscal conservative that if the government wants my job, I think they ought to knock on my door. I ought to go eye to eye, toe to toe with them them, and I ought to know how much that government is charging me rather than doing it through a third party that can hide how much is really being taken from me and used for government services, and also mandating that businesses in North Carolina be the tax collector for the government with no compensation for that at all. So a solution to that we've come up with is a consumption tax, but a little bit different way of doing it. And this is the way ours would work. You would take your federally adjusted gross income, and from that you would have your income. Now if you think about it, there's three things that you can do with your money. You can either spend it, you can save it, or you can give it away. And there's not much else that you can do with it. So under our plan, what we would propose, very simple, is again, you would start with your federally adjusted gross income. You would deduct anything that you gave away for charitable giving. You would deduct anything that you had put into savings, and we would create a new unlimited savings allowance here in North Carolina that would be offered through financial institutions that you would track that savings. So again, you would take your income, deduct your savings, your charitable giving. The assumption would be you spent everything else. We would impose a flat rate. The model that we have would be an 8.5% flat rate of which you would pay on everything you consumed. Now in conjunction with that, we would zero out the state sales tax, we would zero out the corporate tax, and we would do away with the death tax. So it's a very simple way, very different way, but a simple way of looking at getting that tax revenue. Our plan, too, is revenue neutral. Again, I agree with Senator Rucho. I don't think any of these plans should look at raising additional revenue. If anything, I think the plans ought to be looking at reducing the cost of government. But that's kind of it in a nutshell. It solves some other problems, too. When you get rid of the corporate taxes, Senator Rucho alluded to, I'll just say we have wasted a lot of money on these corporate giveaways, these incentive programs that we've had in North Carolina, picking winners and losers. If you get rid of the corporate tax, it doesn't do away with the incentives, but it does away with that corporate tax deduction that so many of the incentives are based on. The other thing after a USA consumption tax too, it solves that problem not only of putting the burden on businesses to collect taxes, but the problem that we've got with how do you treat internet sales as opposed to brick and mortar sales, which is going to continue to be a problem in North Carolina, really across the country. But you solve that because, again, under our consumption tax plan, you pay a flat rate on whatever you spend, and it doesn't matter where you spend it, whether you spend it on Amazon, whether you spend it here at the hotel buying a cup of coffee, or if you buy it on vacation in the Bahamas. Just doesn't matter. So it solves another problem. Another thing that appeals to me about this particular plan is I believe, again, as a fiscal conservative, that there needs to be some limit, some cap on the amount of taxing that a government can do. Again, looking at a long-term plan. Currently, under our state constitution, there is a provision that says that no more than 10% of your income can be taken in state taxes. So there is already a cap put on that you don't have to go back and do something else to put a cap in place. So that's kind of the gist of something that we're talking about at the John Locke Foundation. There are other plans. The Tax Foundation has done a study and come out with 4 different options that they have, sort of a combination of some of the things that Senator Rucho and I are talking about. But there's lots of ideas on the table, and I think that's healthy, and I bet we're going to talk about some other ideas.
I bet we are. This is going to be fun, folks. The stage is set. All right, my former mentor, former State Treasurer Harlan Boyles, had looked at this tax issue for a long, long time, and basically he decided that if we didn't do a comprehensive kind of tax reform, it was just going to get nibbled to death by all the special interests and so forth like that. So I'd like to ask both of you, do you think we can get comprehensive tax reform, or is it going to be just incremental here and there kind of stuff?
There's no question. Every other plan, every other effort has failed because they nibbled around the edges and they never once took care of what is the decaying infrastructure in our economy. Our economy is not competitive for a number of reasons. And it's more than just taxes. It's this General Assembly under Senator Berger and Tillis, and hopefully McCrory will help us move forward in this, has worked very hard in education, making sure there are people that are prepared for the 21st century jobs, making sure that our energy is affordable and reliable. And we just finished a vote now on shale gas, trying to find low-cost natural gas out there to help businesses be more competitive. Of course, reg reform. Senator Jackson, who has been a big advocate both on agriculture and the like, and has been very helpful in helping us work through this tax stuff, has been a big advocate on regulatory reform, especially in the agricultural community and elsewhere within our system. And then, of course, you know, we've got energy, we've got reg reform.
Infrastructure.
Well, the infrastructure is in there too, but taxes are one part of this. But if you don't take it comprehensively and you don't solve the underlying problems, we're going to have, and it has been, and there's a slide we have, a continuous increase in the amount of deficit government has each of the last 3 recessions, going from 8% to nearly 15%. It's getting worse every time because we've never solved the underlying problem. That's why it requires comprehensive changes to accomplish what our goal is, and that's economic growth and jobs.
Becky, I am calling this the Lobbyist Fair Employment Act of 2013. Every lobbyist worth their salt, working for any organization, is girded up for battle to go after their own special interest and tax exclusions and preferences and so forth like that. Do you agree with the senator? It's got to be comprehensive or nothing at all?
Absolutely, and the reason why we haven't seen it before is for the reasons that you just laid out. Every special interest group is geared up and lobbied up and lawyered up and ready to go. And Senator Rucho is exactly right. You know, this needs big, bold leadership and a big, bold plan to really turn this thing around. It really, I think, comes down to a political question, which Senator Rucho can probably answer or address better than I can.
Do they have the will to do it?
Yeah, right, yeah, exactly. Do the legislators have the will to do it? And I think it's going to come down to, do the Republicans have the will to do it? Because quite frankly, although bipartisan support is always something that I think all of us are in favor of and work towards, but with a supermajority in both the House and the Senate and a Republican governor, I think this is the best opportunity that we've ever had for tax reform, and I think it rests clearly with the Republicans.
I want to get to the issue of this revenue neutral that you brought up earlier, Bob. Senate President Pro Tem Phil Berger was here at lunchtime, and he spoke to this group, and he said he would not be, obviously there are 3 ways we can go. We can go increasing revenue, revenue neutral, or decreasing revenue. And he said his preference probably would be decreasing revenue, but he and you said the same thing, revenue neutral. How important is this revenue neutral aspect, and how difficult is it going to be at the end of the day to be able to show whether it is revenue neutral or not?
Well, the key factor about revenue neutral, Senator Berger asked me to work on this project to see if we could come up with some kind of concept and plan for this. You have to have a starting point no matter what you want. You also need to know what your end point is. If you don't know where you want to go, you'll never get there. Whatever, bottom line, whatever direction we go, it will be transitioned through. So what happens is that we will be able to meet the priorities of state government, whatever they are. Now, revenue neutral, let's just say if we in the General Assembly today generated $17 billion in revenue of all the taxes, and there are a slew of taxes if you haven't noticed. And then if we say we're going to deliver $17 billion with a new tax structure, that being revenue neutral. But my preference, Senator Berger's and a number of us would like to say, maybe we'd like to start peeling that back to 16.5. All you really do is change the percentages of your taxation. That's all you need to do. You need the model, and then you just adjust the rates, knowing approximately what amount of revenue you'll generate. So our goal will be actually reducing it. One of the biggest problems that have happened over the last 140 years, and specifically in the last 20 or 30, when our other side of the aisle group was in charge, is they spent the hell out of the money. If there were $2 billion surpluses, they spent every penny of it. Some of it was one-time money. They spent it on ongoing expenses. And guess what we got hit? We got hit with a $2.7 billion deficit when we took over in 2011. We made tough decisions. We stopped spending one-time money on ongoing expenses, and we turned it around to a $230 million surplus in 1 year. Tough decisions. That's what you do in your business. That's what you do in your home. Simply done, that's what government did. Did we take a couple of hits on it? Of course we did, but we're doing what's right.
You know, the philosophy has been, and we've all heard it before, don't tax you, don't tax me, tax the man behind the tree. So far as it goes, this revenue neutral aspect, Becky, how hard is that going to be to do?
Well,
I mean, we take in, you use the figure
right.
17 billion. The figure that I'm familiar with is around 20 billion
right,
in the general
which is
fund.
that's the current state spending.
Right.
Yeah, the North Carolina General Fund. Yeah, it's a lot of money. And I think, to Bob's point, first of all, I think, you know, revenue neutral, you've got to, if you're going to be doing these tax proposals and running models with the different percentages and the menus of how you do that, you've got to take a snapshot somewhere, a starting point to work from, to compare the different ideas and to see what will happen. So that's one reason why I think most of us have chosen a revenue neutral starting point, a snapshot that you would do. But one point on this too that I think is important to be made, again, getting back to the goal of this should be to get the economy moving, to create jobs, to get us out of this quagmire that we're in, to get people working off the unemployment line, to get people less dependent on the government entitlement programs. And that's what the whole focus of the tax reform movement should be. All of these proposals should be getting us towards that so that there's more revenue. Again, people are more self-sufficient, less dependent on government, and then you can start scaling back on those programs. So you've got to start somewhere. I think revenue neutral, although I would certainly advocate for cutting back, and I would like to take this opportunity too to commend Senator Rucho and his colleagues in the General Assembly who during the last session did some considerable cuts to state government. We did that, they did that during the last session. This session now we're turning our focus to tax reform, but I think it's all in the works. I mean, certainly our recommendation would be let's get this economy moving, let's get things going, and then start looking at lowering the rates across the board and cutting government services. We don't need them anymore because
right.
People are taking care of themselves.
Senator, I want to go to one of
that was
is
me.
that you or me?
That was me.
No.
Sorry.
We get very nervous with gunshots like that.
Was just this. I have no shotgun under here.
I may need a custodian. Senator, I want to go to one of the fundamental planks of your plan and the plan that Senator Berger talked about today, and that is eliminating or certainly reducing personal and corporate income taxes. The stats that I read say that personal income taxes amount to 50% of the revenue the state receives, $10 billion. Corporate income taxes are about 4% of the revenue that the state receives. Now, you're talking about going to a use tax, you call it a consumption tax, he says either, she says either. So far as it goes, can we get there by reducing or eliminating? I mean, that's a lot of money to have to replace. Can we get there?
It is, and I will say to you, let's just start off in understanding, and we can make a very compelling argument that the status quo, what we have today, is not sustainable. You've got to understand right from day one, anytime we show the slideshow on this, everyone walks away. We know we got to do something. And when you talked earlier about the fact that do we have the political will to make it happen? I will say to you, yes. But you know who gives us political will? You. When you say, you guys have got to fix this system so that we can have an opportunity to create more jobs and make this the second from the, well, actually the first economy in the country, second to none, okay? But, you know, under that circumstance, we're trying to make some changes that are fundamental to the way we do business in the state. And something we need to consider is, as Becky alluded to earlier, there are a lot of people out there that are given tax preferences, whether you're a business or an individual. And those tax preferences that aren't business to business now, that's something we'll talk a little bit more about. Those tax preferences that aren't business to business, that means everybody, individual, small business, taxpayer, is paying for someone else to have a special treatment. That's not fair. However you slice it, not only is it not fair, it doesn't work. And so simply what we're saying is we really don't have an option. We've got to do something. Yeah, it's going to be bold, but when if I've got a serious illness, I want somebody to be bold and solve this problem rather than give me some pain medicine.
All right,
okay?
Becky, let's get this thing down to a local level. As I understand it now, there is a cap on the amount of sales taxes we pay when we buy a new vehicle. So are we talking now about, if this is going to go to a use tax situation, that we're going to remove the cap from the sales tax on cars and trucks? Is that what we're talking about?
Under our plan, we would do away with the state sales tax. Now, this does not impact the transportation taxes. So, under our plan, and Senator Rich, I don't think,
specific sales taxes on the buying a car.
That's a state sales tax, right?
Yes.
Ours would come down to zero.
Bob?
Ours would do away with it entirely.
A different philosophy. Our belief is any type of income tax that Becky alluded to earlier is something the government basically takes from you. When you use a sales tax, you as an individual tell the government what you're going to pay. If you don't buy anything, you don't pay anything. That's your choice, and that's really kind of a good position for you to be deciding that. But
kind of an unusual position.
Well, it's the right thing because nothing's hidden. You know just what you're paying, and if you can find something that is not as volatile as an income tax, and that's why we're looking at a consumption-based sales and use tax on a very broad-based level, then all of a sudden it's an economic driver. It means that every single time you buy something, somebody else is working to either replenish it, to make something new to replace it. It creates, you're actually using money to create money, and that's the best way to be able to generate, because income tax taxes investment, it taxes production. Consumption, which was 70% of our economy, is the way we would like to feel this needs to be moved. You can't get much simpler than that. You don't pay any more taxes to the government. You don't have to, as an employer, you don't have to do any withholding. As an employer, a taxpayer, you don't have to submit tax forms. It is a very simple way.
All right, but let's take this at another level. All right, here's the guy that is cutting my grass, okay? He's charging me $100 a month to cut my grass. He's a single operator business person. How difficult is it going to be for the state to collect tax on that $100 that this guy's cutting my grass?
It's simple, and how you do it is this. Everybody that does business basically you file one of the different IRS forms in there, C, A, D, E, F, and the like. Anybody that does business in the state of North Carolina will have to register.
As long as I'm paying him by check.
No, you'll have to register either way. And the reason being is our ultimate proposal is to eliminate the business-to-business transactions, to exempt business-to-business transactions for every business. That is what the economists will tell you is the most efficient way of delivering economic growth. And it really helps as far as delivering a product that's going to be less costly and more competitive no matter where you're selling it, whether it's across the border or across the world. But if you do that, think about what you do for the first time ever. And if you don't believe it, there is an underground cash economy in North Carolina and in the United States that people are not paying their share. And what this does is, as a business is there, if you register, you'll get a B2B exemption. If you don't register, everything you buy for your business and activity will be taxed. So therefore, for the first time ever, we actually get after the underground economy. And there were some, we must have talked to 200, 300, 400 people about this issue.
But all due respect.
Well, let me finish this. I don't mean it. You told me to say it when I need to say it. Think about it.
Losing control.
No, I'll come back to you. New Zealand and Australia. New Zealand.
You know, Rufus Edmiston doesn't give me this much problem.
You've never invited me on your program.
I need to. I'll just take a vacation.
New Zealand and Australia tried a consumption-based tax, and what they found was when they did this, I think the term was all the rats got put into sunlight because all that underground money came back into the economy, upwards of 20%. So for the first time ever, we actually get that money into our economy and let it be used so that everybody pays their share, not just the ones that play by the rules.
All right, but again, go back to my guy that's cutting the grass. Come on, let's be honest about it.
Yep.
A lot of this money is going in his pocket. It's cash. So we're depending on the honesty of people to pay their taxes. Now, you're saying there's an underground economy already. Isn't it going to make it bigger?
No, actually, the money he was putting in his pocket, now if he buys a new lawnmower or he has to buy a rake or whatever he needs to do, he pays sales tax for it. The businesses that register pay no sales tax.
So I'm not paying him the tax when he cuts my grass?
The fact is,
Theoretically,
well, theoretically you are.
Yeah.
But that's where he's going to, if he collects it, which he should, and what you should expect him to do it. But, you know, I mean, there are a lot of folks that just don't play by the rules. And those are the ones we need to find so that everybody becomes treated fairly.
All right, now your plan doesn't have this concept to it at all. I mean, because you're just assuming that people, if they don't save it and invest it, you're assuming they spend it.
Right, exactly. There's nothing else you can do with your money. Yeah, our plan doesn't pick any fights with anybody.
Well, I'm not sure this plan's picking a fight necessarily with anybody, but I think that is a very legitimate question. I think you're going to open up an expanded barter economy. I think you're going to open up an even larger. I mean, that's one of the concerns that I've got about this.
Well, the other part about it, it's very simple. Once you can finally implement a plan where you don't have anything but a sales tax and a business tax on that registration, then very simply, that individual has no alternative but to pay a tax on the services that are there. If he buys something, if he has accounting fees, which would, as a business, it would be tax exempt. Now he has to pay for it.
I can see how the CPA would, I mean, because they've got a business and they've got a bookkeeping and accounting and all of this kind of stuff. And now, I'm already hearing an awful lot from doctors and hospitals, very concerned about this. Can you fight the lobbies?
Yes, and I'll tell you why. I mean, there have been a lot of articles out there. I was a dentist, and the way we would structure it, the only thing you'd pay on a dental visit would be the co-payment and the deductible. That would be your sales tax at whatever level we did, and I'm thinking somewhere about 6.5%, which is less than what we presently pay today. And we do have some models we're running, and at some point when we can get comfortable with it, we're going to put it out in the bill and let you have a shot at it. Because we need your input directly, not only as an individual, but as a business person. We want to get it as perfect as we can. We want to have any unintended consequences eliminated. But in reality, if you have more money in your pocket as an individual, you have a choice to say, I can afford to buy that pay for that doctor's bill, or a new set of tires, or whatever I may, even a new car for that matter. Now, there are some things we're going to do about automobiles in the sense, but, reality is...
But does that become an exclusion or a preference?
No, sir. Everybody is going to be treated the same.
Okay. Talk to us a little bit. You made the statement in your opening about the erosion of the sales tax. Explain that to us. Help us understand.
The sales tax today in North Carolina, you pay a sales tax on, and again, as it erodes, the only thing the General Assembly has ever done is increase the rates so they can compensate for the sales tax erosion. I talked with you earlier about the fact that initially it was 1/3 of the money went to services and 2/3 went to goods. Today it's completely reversed. It's 2/3 of services, 1/3 goods, which means that you're only taxing 1/3 of your business activity or your GDP for the state, which is not good because that means you have to continue raising the rates. So, what you try to accomplish with this is basically find a way to be able to tax the services that are being utilized, but that means that if you exclude one person, if we say accountants or attorneys are going to be excluded, then why should the haircut person or the lawn person have to pay? It's not fair. So in reality, everyone is treated the same. It has to be fair, it has to be simple, and as soon as the General Assembly breaks the rule, the principle of saying we give this person a tax preference because they think they're more important than the rest of us, then the system has failed.
Becky, one of the things that has happened with our tax codes, and Senator talked about this a little bit, about what has happened to tax policy through the years. We've coupled our state tax codes with a lot of the federal codes. Now, what I hear you saying is we're going to uncouple from in either one of these plans. We're going to uncouple from the federal plan. Is that pretty much right?
For most things, under our plan, you would get all of the deductions that you get at the federal level and then start that to determine your income. But yeah, that's something
now, the
that's
deductions
right.
at the federal level include charitable contributions.
Right. Mm-hmm. It's everything on the front of the tax form.
The big thing
Right.
that everybody seems to be concerned about is what do we do with the low-income people in North Carolina? Because this becomes a very regressive kind of situation if we don't address low income. How do we do that?
It's a great question. We get it asked every single time. And the reality of it is this. We talked earlier about the fact that here we have a progressive tax system in North Carolina. Income, whether it be per capita or net household income, is declining. Poverty is increasing. Unemployment, 5th highest in the country. Why would we want to continue following that pathway? Let's find an alternative way of actually finding people that can have an increase in income. So that's one part of the regressivity issue. The secondly is the system we presently have today, which is based on government assistance, government dependency, locks people in poverty. What we're saying is we're going to find more rungs on the ladder, i.e. jobs, to let them get up and climb to whatever level they choose to as hard as they're willing to work. If they want to be wealthy, have at it. But at least they'll have the education and the jobs to accomplish that. Thirdly, we're doing a study now that we'll release at some point, and we've shared it with some of the folks. I don't know if we shared it with Locke yet. Civitas we have. That shows a level of income going from 0 to 100,000. And it shows the number, the government assistance programs that exist. And I'll just give you one example. There is, in a situation where a single mother with 2 children who had a $29,000 net income, basically paying minimal taxes, plus all the government assistance programs, and that's earned income tax credit, food stamps, transportation, homes, and everything else, has a net income of $57,900 disposable income, meaning that's what, between that and benefits they have. Now, what that means is you have to be working at a level of $69,000 and you don't even have that much disposable income. Now, tell me how fair that is. Now, there's your regressivity issue.
The issue both of you have talked about that I want to explore for just a second is this business of the estate tax. I think that's particularly relevant to this group today. I think that you know, we talked about the fact that agriculture and agribusiness are asset poor from the standpoint that they use a lot of machinery that's fairly expensive and so forth like that, but they're also land poor. And we're going to talk about that in the next segment that we're talking about today. But this issue of eliminating the death tax, the estate tax as it's called, the federal government, part of the cliff negotiations involved that. But can we get that done in North Carolina? And is that a fair elimination, Becky?
I think it's a very fair elimination. I think that it's an unfair tax, and it impacts farmers and people who are large landowners trying to pass that. You all know that better than I do, trying to pass that down to your heirs, and it prohibits a lot of people from doing that because of the taxes. And I believe that it's the right thing to do, and I believe that it will be done. Now, Bob may be able to speak more to the political part of it, but we've already had a bill introduced that would eliminate the death tax altogether in North Carolina. From everything I'm hearing, there's a real appetite to do that in spite of or irregardless of other tax reform that may occur.
You know, when I was working for Harlan Bowles, I did some research for him on this issue. You know how the estate tax got started? The estate tax got started back in the days when Roosevelt's imposing income taxes on everybody, and there were all these Carnegies and Rockefellers and Mellons and so forth like that that had made millions and millions and millions of dollars, but they didn't have to pay any income tax on it because there wasn't an income tax system. So they started the estate tax program with the idea of equalizing and making fair to these people who had earned all of this money, and put them on the same playing field as people who today were earning that money. Now, what year was that? 1930 something? We're still into this estate tax problem, Bob. Why haven't we been able to fix this?
We're still stuck in the 1930s, whether you're talking about an economy based on a depression type of economic status, you're talking about a tax system, part of which is the estate tax. The fiscal cliff legislation actually means a tax increase for people in North Carolina that die. And we're opposed to that. And we've already allocated $50 million for this year and in subsequent years in our budget, and we're going to zero that out. We'd like it to tie it together with a comprehensive tax package so that that can be done together. But yes, we're working on getting rid of that completely. The other thing you look at, no income tax means no capital gains tax. When you sell your business, you keep the money because you paid for it already once. Why should you pay for it again?
I think you'll find some friends there. All right, so we got a little different approaches here on how we get to where we want to go, which is revenue neutral or less. Let's talk about some of the elements that are important in tax reform. Okay, so revenue neutral. One that everybody talks about is transparency, tax fairness. In other words, it's fair to low income as well as to high income. Efficient from the standpoint of the state being able to collect the money from wherever it's coming from. What other, first of all, would you agree with those criteria, and what other criteria would you have us include in a tax reform package, Becky?
I think it needs not to be too complicated. I mean,
simple.
the whole, exactly, and that would be simple, efficient, equitable, fair. It ought to be easy to file your taxes. It also ought to, when we talk about transparent, we ought to know how much we're paying in taxes overall to the government. And the way that system that we have now, with a little bit here and a little bit there, and Bob alluded to the number of taxes that we have and the taxes and the fees that the government has to take money, it's hard to keep up with it. And the way that the system is now, I don't think anybody knows exactly to the penny or even to the dollar or even to the $100 how much they pay each year in state and federal taxes. I think that we need to get to something where it's more transparent so that we know. Now, when we've proposed this in the past, people have said, well, we couldn't possibly do that. If the citizens knew how much tax they were paying, they would revolt. Well, that's exactly what should happen. You know, we should question that. We should know where that money's going. We should know how much we're paying and who we're paying it to. So I think that simplicity and transparency, and again, equitable. I think it needs, everybody needs to be treated fairly. And those
Bob,
are the things that I would.
I'll just say to you, the tax book in North Carolina is that thick, and it's gotten thicker over time.
And the CPAs can't even figure all of it out.
Well, it requires someone a lot smarter than us normal people to do that. But what you want to do is add that much on the federal, because we're coupled together. So there's that much tax rules and regulations. Now, how does anybody even begin to understand it? Why would you even want to be? Simplicity is critical. What simple means is not paying taxes, except for the ones that you choose to pay, and that is on a consumption-based tax. So, you know, it could be simple, it could be fair, it's less volatile. Income is very volatile. What that means is on any type of income tax you have, it could go 30 and 40% jumps. What that means is you have a lot of volatility in the revenue stream that you have. You can't even begin to budget efficiently, never mind reduce your expenditures by having a volatile income tax. You need to have a simple, less volatile tax. And that's why we've moved, after considerable study, after talking with economists, why a consumption-based broad tax is really the best way to go. Don't you agree, Senator Jackson? Of course.
What good are you if we can't put you on the spot?
I just would like to address the volatility issue, which I think, Senator Rucho, you're exactly right, and that's very difficult to budget for. I mean, you all know that in your businesses, when you don't know what you're going to be bringing in the year before, but you're trying to set a budget and exactly how much you're going to spend. And one way to get around that volatility issue would be a change in budgeting, where we would base our budget on the income that we had last year. The way that we do it now, and you know, you all are getting involved in the budget cycle, and there's all these these forecasts and, quite frankly, a lot of reading of tea leaves of how much money we're going to have next year, what should the state budget look like, how are we going to allocate this money that we think we might have, or we maybe might have this much next year, but we might not, the volatility and the uncertainty of it. Another thing that we would suggest, along with this tax reform change that we put into place, is to change the way that we do our budgeting and base this year's budget on the money that we've got in the bank from last year, so that at least we know what we have to spend and how that money can be allocated.
I want to get to this again. I think, again, we've got to underscore the fact that Senator Rucho has, in some respects, dying a death of 1,000 cuts from the standpoint of the fact that he's been out there with a plan, and it's been the only plan, comprehensive tax plan, essentially. And so everybody's taking pot shots at your plan. One of the things that was in your plan, Senator, was a business license fee. President Pro Tem Berger today essentially said there would not be a license fee involved. Tell us about the discussion and the consideration.
First of all, when I started this Senate job, I was 6 foot tall. So
and jet black hair.
And jet black hair, that's exactly right. You know, and you think about this, and this is what I want you to go home with, think about it, email me, whatever you want. If we go to a consumption-based tax, which means goods and services, that means a retails tax, getting rid of business-to-business transactions, that's going to be very key. Each business in North Carolina utilizes the education system, the judicial system, the natural resources, whatever they do. They should pay something. Now, the business license tax that we were working with, and there are only 3 ways to tax. One of them, net worth, which is like an intangibles. One of them, gross receipts, which has problems. And the other one is some kind of modified income tax. Each business has to pay something. Okay, you can't, first of all, politically we couldn't pass it without that. But secondly, it's only a fairness issue. If you use resources in the state, you should pay something for it. Not that we're trying to gouge. You know, the attitude of a lot of our liberal friends said, let's give it to the business, let's stick it to the businesses. They don't understand any tax that exists on a business is going to be translated directly to the consumer to pay. It's like the cost of doing business. So we're not sticking it to the businesses, we're sticking it to the consumers. And that's what government is doing to us. But it's critical to say, and I want you to think about it, how do you think the fairest way is for a business to actually pay something to the system? You might not have an answer now. Think about it. Either tell me, tell Senator Jackson, Senator Berger, but let us know, because we're out there reaching, trying to find the best way. We can give you problems with gross receipts because of pyramiding, which means tax on tax. You know, the net worth tax has got problems with folks that have land and things of that sort. The income tax, if you still had an income tax and you had an LLC or sub-S corp, you could structure it so that you would be able to prevent yourself from paying any business tax. By moving everything over to income, you don't pay income tax. That's not fair to anybody. We're trying to find one way of solving this problem at a very flat rate, maybe with a ceiling and a floor.
All right, we're running out of time. I want to ask each of you to take your crystal ball out, tell me what's going to happen on tax reform and when. Becky?
What we think is going to happen, or what we
I want
hope
you to know
will happen?
what you think is going to happen.
I think that there will be some incremental changes that will be made.
Not comprehensive.
I am disappointed, and I wish there would be big, bold, big comprehensive tax reform, but I don't see that happening. But I do think that we will see the estate tax, the death tax go away. I hope that we see something done on the corporate tax. I'd like to zero that out entirely.
All right, Mr. Chairman of the Senate Finance Committee, what's going to happen?
Well, there's been a lot of effort made to try to fix it. I had somebody make a recommendation the other day, and they said, well, let's just go ahead and do 1/4 point for the next 4 years, call it a win, and quit. It does nothing to fix the problem. And I basically told them, that's like kissing my sister. I said, I'm not going to do that. And as Becky alluded to earlier, we're going to pay a political price and a price on doing something. We might as well do it right the first time, because that's what you sent us up to do.
Folks, this is an intriguing discussion. This is an intriguing discussion, and it's an important discussion. And I want to thank Senator Bob Rucho and Becky Gray from the John Locke Foundation for coming to us today and having this discussion. I hope you found it interesting and enlightening. Senator, again, Becky, thank you very much.